My name is Michael Duke, and on this channel, I analyze stocks that I think are interesting. If that type of content interests you, then please consider subscribing to my channel and liking this video. Today, I'm going to be talking about a company that I have been watching for a while, but just have never felt compelled to pull the trigger. But that might be changing soon. And I'll go into why that might be. And as always, be doing a deep dive of this company, talk about the investment thesis, what makes it interesting. I'll analyze the financials, the valuation, the dividend metrics, talk about some of the risks. I will grade it a buy, sell, or hold, as well as do some technical analysis. So today, the company that we're looking at is McCormick and Company Incorporated, ticker MKC. Super interesting company. So this company, it's been around for a long time. In fact, you see in the description here, founded in 1889. This company makes spices, seasonings, condiments, and other flavor products. You may recognize the logo. There's lots of McCormick branded spices. But interestingly, there are a lot of brands here that you might recognize. Cattleman's, Cholula, they acquired that a few years ago. Frank's RedHot, French's, that's the number one mustard in the world with an asterisk. We say here you by retail value sales. Frank's Red Hot, number one hot sauce in the world. Retail volume sales of hot sauces, excluding chili paste. Cholula, number one Mexican hot sauce in the world. Retail volume sales of hot sauces, excluding chili paste. Lots of leading brands here. They have again, at the aforementioned McCormick branded spices. I've used many times. I've used their au jus packet to make really good French dip sandwiches. So I'm familiar with the brand. Old Bay, I'm sure you've heard of that. Simply Asia, Thai Kitchen, Stubbs Barbecue, and Zatarain's. Hopefully I'm saying that right. And a lot of other brands that I do not recognize. However, I will say, we say here the leading premium barbecue sauce. It says here, McCormick is the number one herbs and spices brand in the world. Again, by Euromonitor International Limited, by retail value sales. So this is one of those companies. It's only a $21 billion market cap. It's one of those companies that really has a lot of market share that you may or may not have heard of before. We see here 1 year performance 17%, but the stock has actually traded flat the last 5 years. Very underwhelming performance, but done well over the 10 years and in the 30-year time frame here. So this is a really interesting company. I like to look at companies like this because food brands, or in this case, it's a flavor products, condiments, seasoning, spices. These products there's a lot of opportunity for companies to establish very strong intangible brand equity around their products. And while they are exposed to commodity inflation of the inputs that go into the production and manufacturing of these products, the possibility for them to create brand equity and create this intangible asset in that brand allows companies like this to establish very wide economic moats that allow them to maintain very strong gross margins over time and raise their prices in excess of inflation. So if you've been watching my videos for a little bit, you've probably seen me do a couple other videos of consumer products companies, notably Hershey, Procter and Gamble. This company I see kind of being in that similar vein, in that it is within the consumer staples industry. So what is the thesis as to why this is interesting? Well, it's, again, very simply, a wide economic moat around a lot of these brands that they have. They can drive growth through accretive acquisitions, and they returns a lot of their cash flow through dividends to shareholders. And I think that it's kind of been a beaten down stock the last few years. It's been a very well performing stock over time, but not in the last 5 years. Kind of diverging from the S&P 500 and Nasdaq as a whole, which may indicate value. But we'll look at the valuation metrics in a moment. So why is this a compelling investment? Again, wide moat around intangible brand equity, returning capital in the form of buybacks and dividends, and dividend growth over time has been substantial. In fact, if we look at this press release dated November 19th, 2024, they announced their latest dividend increase from 42 cents a share to 45 cents a share. That's roughly 7%. But here's what's interesting. This marks the company's 101st year of continuous dividend payments and the 39th consecutive year that it has increased its dividend. So again, companies like this that have that strong intangible brand equity around consumer staples products, they're not going to face the same competition that technology companies might from, say, artificial intelligence or new platform risk. There's a reason that companies that ascend to a certain size in this space just tend to maintain and get stronger over time. So I think that it is a compelling company. I think it's been very well managed over the years. It's seen headwinds over the last few years, indicative possibly of value. And as somebody who loves dividends, I really like the outlook for this company in the go forward. So let's talk a little bit about the financials. We'll look at the income statement on an annual basis, which goes back to 2014 to the most recent trailing 12, 4.2 billion to roughly 6.7 billion. That's about a 50% increase over that time frame. Gross profit, however, 1.7 billion to 2.5 billion. So about a 50% increase in gross profit. So revenues and gross profits have stepped up at about the same rate. And then operating income from 600 million to 1.1 billion. But typically, what is demonstrative of very strong brand equity that I see is revenues increasing at a certain rate and gross profits increasing at a slightly higher rate, and even operating income increasing at a higher rate than that. However, it does appear to me that while the financial performance of this company's income statement on an annualized basis is strong, that maybe it's not top tier. We actually see here shares outstanding have gone up slightly over time. It does not appear that they have been doing that. In fact, their share count has gone up, and I'm just guessing that that's in the form of stock-based compensation. So I actually view that as being a positive, because if we look at their dividend per share from 74 cents to $1.65, that's more than doubled, which should mean that their payout ratio has gone up over time. Yeah, 44% to 56% in the trailing 12. The fact that they're increasing their dividend at the rate they are does signal strong confidence in their brand portfolio. They've been able to raise their dividend at a strong clip over that time without the financial engineering resulting from buying back shares. To me, it means that if they were to prioritize buying back their shares, that they would accelerate dividend growth, perhaps into the low double digits. Again, remember, we see here they raised it roughly 7%. And that's not amazing, but it's pretty strong. Inflation right now hovering around 3%. So that's more than double the rate of inflation in the trailing 12. So ultimately, the income statement, kind of a mixed bag. Strong performance. It's not outstanding. They clearly have good pricing power because they've essentially maintained their gross margins over time, just on the eye test here. And it does appear that they have their cost structure in terms of this. It looks like they, with selling general SG&A here, that's gone up by about 40%, conceivably due to marketing. This is a quick and dirty visual analysis. Let's take a look at the balance sheet. Currently, they have 200 million in cash and equivalents and 1.25 billion in inventory, and it looks like they have some real estate, machines. They do have a lot of goodwill on their balance sheet. I would assume that is due to an acquisition. In fact, I see here 2017, 4.5 billion. They incurred a lot of goodwill on their balance sheet. I believe that is the year that they purchased French's, which came with Frank's RedHot and some of these other brands. So, how does that look compared to their long-term debt? Well, also in that year, 2017, yes. So they financed the acquisition of French's with debt, but they've since paid down about 25% from 4.4 to 3.3 billion. So that looks really strong. Not only are they retaining a lot of earnings, we see retained earnings here have really accelerated quite a bit. So not only are they retaining a lot of earnings, but they are paying down debt and distributing those earnings in the form of dividends without needing to, they're not really buying down their share count. So they obviously have a lot more debt than cash. So their balance sheet is not outstanding, but it is strong from the standpoint of where it's trending. So I don't really see any glaring concerns with the income statement or the balance sheet. I don't get overly excited either. Let's talk about the valuation. Let's take a look here. So, as you can see, valuation grades fairly poorly in a lot of metrics. They're trading at about a 27 price to earnings ratio on a non-GAAP basis, which I always use here. Price earnings growth ratio of 3.71. That's fairly high. Price to sales, about 3. That's high, but not as high as a stock I looked at recently, Procter and Gamble. They were up around 5. Different company, but similar investment thesis. Again, quick scan of the valuation. This stock looks fairly expensive to me, based on these numbers. Let's talk about the dividend, because I think that the dividend yield is a bona fide valuation metric. We see here for your average 1.82, but currently the forward yield being 2.3, indicating that their yield might be higher than usual. In fact, we do see the current yield is above average for the last 10 years. It's not the highest seen, peaked in October 2023 at just above 2.5%. But it does look like throughout the last few years, they were trading at a even more premium valuation in terms of the dividend yield. So kind of a mixed bag in terms of valuation. We see here free cash flow yield, 3.7 on a forward basis. That's pretty low, I think. And it does imply that given their dividend yield of 2.17 versus their free cash flow yield, that they are paying out about 2/3 of their free cash flow in dividends. So that's strong coverage, but definitely not as strong as a lot of other stocks that I've analyzed. So in terms of valuation, I think that this stock, it looks pretty expensive. right now. Seeking Alpha does back me up on that. Does that mean that it's not a good investment, though? That is a completely different story. I like to look at how it trades, the market behavior. So, what do you notice about this chart? Well, first off, it's underperformed the broader market over the last year. However, what sticks out to me is that when the S&P is selling off, this stock seems to have some bullish momentum. So, interestingly, and this scores big points with me and my strategy personally when I invest, particularly in my taxable account. I have a affinity for companies that have wide moats, pay strong dividends that are increasing with fair to modest to strong dividend growth that show a little bit of acyclicality. And again, this is only a 1 year chart. Obviously, it's underperformed. You would have done better just to own the index, at least in terms of price return. However, it does appear that this stock does apply, at least over the last year, some shelter in a sell off in the broader market. Let's look at the 3 year chart. This period here was the last bear market in the S&P. McCormick did outperform somewhat, however, has stayed down and not recovered, whereas the S&P 500 is at new all-time highs. The 5 year chart looks even worse. It's negative on a 5 year basis. The 10 year chart is where things start to look pretty interesting. You see here pretty notable outperformance. Here, the S&P traded down. McCormick was very strong and really been a solid performer, but again, has really fallen out of favor lately. We see that it has handedly outperformed the S&P 500 over the last 30 years in terms of price return. If we take a look at the total return, which is important for a stock like this, we see very demonstrable outperformance and almost keeping up over 10 years, though still underperforming. Is this stock a buy? It's been one of those that it checks all the boxes. Like the underlying company checks a lot of the boxes and really passes the eye test, the smell test, everything that I like to see out of a company. I have not bought it. I've been very interested in it for ever since I really learned about it, and have not established a position because it has just always looked very expensive. So is it a buy? I think it is. I hesitate to say it this way, but I like the fact that there's somewhat of a divergence in valuation. It does seem that the market is punishing this stock in ways that are atypical throughout its history. And that does indicate some relative value. However, the price earnings ratio is high. The dividend yield, if the dividend yield were very low over the 10-year period, I may think a little bit differently. But the fact that you can snag this at an above average yield over the past 10 years, I do find that interesting. Dividends are not everything. I grade this a very, very soft buy, like not a deep allocation, putting a lot of money into this stock, but I've really been sitting on the sidelines of this one for a while, and I am starting to get interested in it because I just like it, and I think it presents strong long term value. It has outperformed the index the last month. It has outperformed the index in the last 6 months, and at one point was doing so very strongly while the market was kind of bouncing. So I like the stock a lot. However, I do wish it was at a better price. However, it is, in my opinion, a sleep well at night stock. So I grade it a buy. Let's talk about some of the risks. This stock does sell their products in lots of countries. Somewhere in here, I saw that they were selling their products in 130 different companies. In fact, we see here EMEA, that's Europe, Asia Pacific, talking about China. North America. So there are some currency fluctuations. There is some currency risk. What are McCormick's sales by region? Let's see if we can pull this up. Okay, this is not recent data here, but let's just take a look. So I don't want to pay for that. Let's just get a rough idea. Again, I urge you to look into this further if you do have interest in the stock. I'm just doing a quick and dirty analysis here. Revenue by region in 2020. I assume these numbers are in billions. 3.45 billion in the United States, 1 billion in Europe, 1 billion in the remainder. So that's, 60% of their revenues coming from the United States. So currency risk is present in this investment. I would say I certainly would not worry about that too much when making an investment decision. It's not too different from other companies that I like. What are some of the other risks? I think as is present with any company like this, you have litigation risk stemming from some sort of recall or lawsuit regarding the health concerns of their products. However, you can't anticipate those types of risks. You can't quantify them. They're hard to manage, and usually when they do occur, they may be a good opportunity to buy shares, but something to monitor, something to pay attention to when they do occur. So that's always a risk with a company like this. I think really the main risk here is just the fact that the company has underperformed the market really over the last 5 years. And while that may indicate that it will outperform in the short term, it might not either. So a risk here, as with any company like this, is I don't believe that it's projected to grow its earnings quicker than the market, and therefore underperformance is a risk. But again, fairly benign. I'm looking to outperform the market on a risk adjusted basis. The fact that within the last year, the company has shown some inverse correlation, but still uptrending to the market. I really like what that does to the returns of my portfolio. I like that a lot, and I like the dividend. So, yeah, that risks with this company, I just view it, just generally speaking, as a fairly low risk company. But again, the valuation is a risk. I mean, it's just an expensive stock that isn't growing very fast. And I just did a video about Procter and Gamble where my synopsis of it was essentially the same. However, the reason I graded Procter and Gamble a hold, and the reason why I think that this is a very modest, moderate buy as opposed to a hold. In other words, I would allocate a very small position of my portfolio to this company, but not Procter and Gamble at this time. The main reason for that is its trading behavior, that it has shown some inverse momentum while still uptrending to the index, which I like, and Procter and Gamble just does not demonstrate that behavior. But also the fact that you have that divergence in valuation, which is indicative of relative value, not absolute value. One thing I wanted to highlight here is take a look at the Morningstar report. You notice here, Morningstar does assign a wide economic moat to this stock. I agree. Notice here that really, I think this goes back 5 years. Never at any time has this stock rated as undervalued at any time, even when it sold all the way down to the low. I think it traded in the high 60s a share at one point. So never at any time has the stock traded at a cheap valuation, and that's not a bad thing. So the market does like this stock a lot, and I see why. But they've currently assigned it a 2-star out of 5-star rating in terms of its valuation. One thing that I do want to highlight here, right here, they discuss the market share. So 20% of the global spices and seasonings market, very, very strong. They say that that's 4 times the next largest operator, according to Euromonitor. So by far, if you wanted exposure to the spice market, this is probably the best in breed here. Further down where they discuss the moat, there's also some very interesting things. So again, firm stands out in the global herbs and spices market, securing about a fifth, surpassing private label 17% share. So they actually have their branded products have a larger share of the market than private label spices, which is very, very strong. In sauces and condiments, okay, so RB food brands. So that's when they acquired Frank's RedHot, French's, and Cattleman's. And then they acquired Cholula in 2020. So they're growing through these accretive acquisitions that I really like this portfolio of brands. These are brands that I enjoy myself, most notably the hot sauce brands. I really like spicy food. I really like those two hot sauces. So through these acquisitions, the company ascended to the top position in the global chili sauce market, which has been boasting outsized growth. Additionally, the deal solidified McCormick's top North American share position in mustard, boasting a 39% share over twice the size of its nearest rival, narrow moat Kraft Heinz. Also enhanced share in barbecue sauce, securing the third rank with 6% market share. I really like that because they have very, very strong or leading market share in several categories. There's kind of the legacy spice brands where they have globally leading market share, and then they have very strong market share in North America with the mustard, the hot sauce, and the barbecue, although not a leading market share in the latter. So that's really interesting. Let's take a look at the chart, and this is something that I think is very noteworthy. I rate this as a very moderate buy because I do believe that it is a good time to take a look at this stock. My chart is failing me. Let me refresh it. No, we don't want to look at silver. We want to look at McCormick. Silver's cool. Sorry, silver, if that offended you. Okay, so let's take a look at the long-term chart. Pretty steady performance starting in 2009. We kind of started to see the trend that we're on right now. This kind of more mirrored here, but we see here in Q4 of 2023, it bounced off of this long-term uptrend line. And we see kind of here throughout 2019 in the yield chasing era, I'll call this, the stock notably outperformed. But what's interesting here is this wedge pattern here that's being created. This chart here, again, this is a very weak formation here because we really only have a different trend line here. In fact, I'm going to zoom in a little bit more on this. It's bounced off of this long-term trend line, but now it's kind of created this new channel here of much more bullish looking momentum here. So here's what's interesting, right? It ascended to new all-time highs March 2022 and has just downtrended its way all the way in. Arguably, it still might be in that formation still. Every time that it has attempted to break out of this channel, it has failed to do so, trading all the way down to the long-term trend line. This chart, I think that technical analysis is really relevant on this stock price because what I'm looking at here is, again, recently we've bounced off of this new uptrend channel here. So conceivably, the stock could continue to trade all the way up into the really where it's close to here, the lower 80s here. We see 82.50 roughly is kind of the target there. So if it fails to break that line, again, this is just technically speaking, there's no guarantee of this, but in theory, if it fails to break that line, it'll either trade down here, have another chance to bounce, or it'll trade all the way back down to the upper 60s, around the $70 a share mark. But if it does break out of this line here, and that breakout is accompanied by strong volume, then Yeah, we might have a nice little trade on our hands. So I graded this a moderate buy, and what I mean by that is I want this stock. I want to buy it. However, I do believe that it'll be worth more in the future than it is today. Um, and when you have that view, the short term noise is maybe irrelevant. But what I'm looking at is pretty soon. I mean, it's not going to be very many. We're looking at a quarter or two here that we kind of come to the event horizon, this wedge being consolidated and broken out of or failed to break out of. What I'm looking at here is that this stock in the near future will it might present a buying opportunity. And the buying opportunity to me is either when it bounces off of this line here, this bottom trend line, or when it breaks out of this very crude wedge that I've drawn here. So the way that I'm probably going to approach this, I don't have a ton of cash laying around, but I might just allocate a little bit to this stock right now just because I really like it. But however, if it were to come down to the trend line here and approach that area, or um, break out above this, down trend resistance line, I might think twice about maybe entering into or adding to my position with more conviction. And I'm not an expert at this, folks, but I have been doing this for a while, and stock prices they do seem to follow recognizable patterns. And I'm not very sophisticated at technical analysis. However, I find that even a simple technical analysis it does lead to insights. So I do think that out of all the stocks that I've covered in the last several weeks, that this is the most interesting looking chart. And if you are interested in this stock, that it's probably worth it to watch it and see how it behaves. And my recommendation, again, not financial advice, my recommendation would be to do your own analysis, draw whatever indicators you look at, but it does appear that there is several different event horizons here that may present kind of a short-term arbitrage opportunity. And furthermore, we kind of see where this wedge is going here. It kind of culminates at this 73 point here. Again, this is a very strong stock. I would imagine if it wedged all of its way to this event horizon here and then out traded it here, that it would probably be pretty bullish, assuming that the company does not significantly miss on earnings and deliver bad news and whatnot. That's obviously very relevant to the stock price. So, anyways, that's probably the most technical analysis I've done on a stock on this channel. But hopefully you have found it interesting. And again, if you like this content, if you want to see more of it, then please consider subscribing. Comment below with your thoughts, feedback, stocks that you want me to look at that you find interesting. I'm happy to take a look. I love engaging with my audience. I do this stuff all the time. It's a passion of mine. And I have skin in the game too when it comes to what I'm doing. So I'm not doing this just to make content. I'm doing it so I can shape my own portfolio and chase my own financial freedom. So, anyways, if you found that interesting, then I'd love to hear from you. Engage with me, follow me, and let's keep in touch. And I hope you found this interesting and helpful. And I will sign off now. But until next time, hope you have a great rest of your day. And I will be seeing you soon with my next video. All right. Thank you. Bye.